In this video, I'm going to do the technical analysis of Dow Jones Industrial Average Index for the week commencing from September 7th, 2021. This analysis will be in two parts. First, I will do the analysis on the weekly chart, and then I will do the analysis on the daily chart. So this way we will get the most accurate results here. I have given the links of my stock market strategies programs, options trading programs, options strategies programs in the description of the video and also in the comment section, so you can take a look. So first I'm going to start with the weekly chart. This is the weekly chart and these are the weekly candles. If you see this, the last candle, it is a bearish hammer, but in this is a small bearish hammer. Okay, this bearish hammer in the bull trend, it only signifies that the bull trend is a little weak. Means there is not that much of momentum in the bull trend as it was 2 or 3 weeks ago. So this is the interpretation of this bearish hammer. One more thing, that this bearish hammer is not saying that necessarily the market is about to go down. No, this bearish hammer is saying that the market is still in the bull trend, but it's weak. Now, if we talk about the support and resistances here, so we have our resistance at 35,700. This is the critical resistance, 35,700. Then we have very good support here at 34,500, 34,500, and then another support. You can say that this is the critical support here at 33,600. So the support and resistances, they are same for last 4 or 5 months. So what we need to see here is that if on Tuesday or Wednesday, if the market moves up, then whether the market sustain at these levels, means particularly this level at 35,700. So one more thing, whenever I say the support or resistance, so that does not mean that it is a single number. Means in this case, if I'm saying that the resistance is 35,700, so it is not 35,700. It is 35,700 plus minus 100 or plus minus 150. So support and resistances are the zones. Support and resistances, they are the zones. They are not just one price. So support and resistances are the zones. Okay. Now let's do the technical analysis on this chart, on the weekly chart. So if we talk about the moving averages, then moving averages are clearly supporting the bull trend, and there is a clear fan out here in case of these the moving averages. So there is a clear bull trend through moving averages. One more thing with this the moving averages, that if something happens in this week, means if the market moves up and if it fails to hold above the moving above this resistance 35,700, so it could be 35,750, 35,800, or maybe 35,600 or 35,650. So if it fails to hold above this resistance zone, in that case it is expected to come down, and in that case it will find support here. And because this means these moving averages, they are also going to proceed in this case, so they will also hit this level, this resistance level. So around 34,500 or 34,600 or 34,400, the market will find very good support here. Now if we talk about the Ichimoku, no, Ichimoku, there are no chances that market is going to hit Ichimoku in this month. So it may take 1 or 2 months, maybe 3 months on the weekly chart. Sorry, not the 3 months, but 1 or 2 months to hit the Ichimoku on the weekly chart. Now if we talk about some other indicators here. So okay, here we have the stock RSI. Stock RSI is bearish on the weekly chart. Okay, this is this is another signal which is saying that the market may be in bull trend, but it is weak. Last week I also told you that the market is in a weak bull trend. So again, but here now here it is clear that the market is in a weak bull trend, and it may means it may come to the bearish territory anytime, means within this week or within next week. So market is on the weekly chart. The market is bearish through stock RSI because the K channel is less than the D channel. MACD market is okay. MACD is also bearish. Okay, so this is fantastic. Means the both stock RSI and MACD both are bearish here. So these indicators are clearly saying that the market is about to get bearish. Okay, momentum. No, there is not enough momentum in the bull direction, which is what, and this is the same thing that I'm saying, that there is a very that there is a very weak bull trend here. Means there is a bull trend, but but this bull trend is weak, which means that the market can come down anytime. But we are expecting that that first the market will move up and then it will come down. If we talk about the divergence, yes. So divergence is it is a point of concern here because the price is too much. Means there is a lot of divergence in the price from its mean. So you can say like yes. So divergence is the divergence is almost 64. So we can expect the divergence to hit maybe 67 or 69. Means whenever the market moves up, so divergence may hit 67 or 68 or 69, and then it may come down. Okay. So on the weekly chart, through these indicators, means like moving averages and the Ichimoku market is bull, but through these indicators, through stock RSI, MACD, market is bearish. So on the weekly chart there is no clear trend here. So let's move on to the daily chart in order to get a clear trend. Okay, we are here on the daily chart, daily chart of Dow Jones Industrial Average Index. Okay, so we have seen that on the weekly chart the trend is not clear. However, one thing is very clear on the weekly chart, that there is a weak bull trend. That is very much clear on the weekly chart. Now this is the daily chart. So if we look into the daily chart, then this last candle and the last almost 8 or 10 candles, these candles these candles, they closed above the moving averages, which means that they are signifying a bull movement here, so because of the closing of these candles. So last candle is a bearish hammer. So bearish hammer here, this kind of bearish hammer, okay, it often signifies that there is going to be a trend change, means the next candle may fall. But in this case, because the closing of this hammer was above the moving averages, so which means that yes, there is still some bull movement and the market may still move up. Okay, so we need to see like what happens on Tuesday. So Tuesday it is expected that there may be, that means there might be some gap up opening if the global markets, if they will be in green, then for sure there will be a gap up opening on Tuesday. Else there will be a gap down opening, and in that, and if there will be a gap down opening, then first the market will try to get some support here on the moving averages, and if it fails to hold here on these moving averages, then it will come down. It will come down to hit this moving average and also the lower band of the Bollinger the Bollinger bands, the lower band of it. And if it fails to hold here, then it will come and it will hit this moving average, and finally the Chimoku, and then finally this support. Okay, so we need to see like what is happening on Tuesday, particularly just after the opening of the market, whether the market is able to hold here, or the market is coming down, or the market is moving up, because through all of these candles, okay, it is clear that the market is expected to move up, and it is expected to hit 35,700. So this is what is expected here, and yes, so it will be good if the market moves up and hit 35,700 and then comes down heavily after hitting the 35,700, or maybe 35,600, 35,650, like I told you, plus minus 100, you can say plus minus 100 in Dow Jones. So that is acceptable, and that is the zone, basically the support and resistance zone. So here one more thing, that the upper band of the Bollinger Band is also very near to the resistance at 35,700. So yes, it is again another indication that whenever market moves up and whenever it hits almost 35,700 or 35,650, maybe 670, then the chances are that it will come down. Okay. Now, if we do the technical analysis here through the moving averages, it is very much clear because the candles are on one side of the moving averages, and there is a clear fan out here through the moving averages. Okay, which means that the moving averages are on the daily chart are clearly supporting the bull trend. Ichimoku is again supporting the bull trend. And if we do the technical analysis on other through other these the indicators, then we have the stock RSI. Okay, this is an interesting thing here, that the stock RSI is partially bullish on the daily chart. The stock RSI was partially bearish on the weekly chart, but it is partially bullish on the daily chart. MACD is partially bearish on the daily chart, and momentum, there is little momentum here. Divergence is okay, is acceptable. It's only 54.55. So which means that all of the indicators here on this chart other than the MACD are supporting the bull trend. So there is a clear indication that that on Tuesday or on Wednesday, but I think it will be Tuesday. So particularly on Tuesday, okay, the market may try to move up, okay, and then it will find this resistance here at 35,700, and then after hitting the 35,700 and this the upper band of Bollinger Band, then it will come down. Then it will come down here. Okay, so you need to see like what is happening on Tuesday, where immediately after the market opens, whether it is able to hold above the moving averages. Moving averages are at around 35,270 or 35,275, and if the market closes or sorry, if the market crosses the moving averages, then for sure the market is coming down for this moving average, which is around 35,000. So 35,000, then once it hits the 35,000, then it may try to hold, else it will come down further. Okay guys, so this was the technical analysis for Dow Jones Industrial Average Index for the week commencing from September 7, 2021.